Good afternoon, everybody. Thanks so much for joining us today for our Thursday broadcast. A little secret for you. We are pre-recording this webinar because we have a special guest and we're going to take you on some live tours of the Realty portal and also a great new tool that we're recommending. If you're joining this webinar live, it's because you know the importance of analyzing deals accurately, especially in today's market. With interest rates going up like they have, no question, the metric that has been impacted the most on our pro formas and on our projections is cash on cash return. Interest rates have just really cannibalized the cash flow over the last several months. And so novice investors are tempted to just, swipe left on a deal because of year one cash flow. And we're trying our hardest to make sure that people are seeing the bigger picture and considering total return on investment and not just year one cash flow. But it's harder to do that. At least it was. We've identified a great new tool that we're leveraging at RealWealth that we want to tell you guys about on how you can analyze your properties more effectively over time. So thank you so much for joining us on this webinar. Today, we're going to talk about the new and improved way to analyze your real estate deals. I'm Leah Kolich, an investment counselor here at RealWealth. This is our standard disclaimer. So the strategies that we're going to talk about in this presentation today might not be appropriate for everyone. Other options not mentioned might be more suitable for your specific circumstance. So as always, consult your own personal team, your accountant, tax advisor, attorney, CPA. Past performance is no guarantee of future results. Real estate purchases are, of course, subject to investment risks, including the possible loss of everything you invested. So making every effort to bring you accurate information today, and so is my guest, but of course, the possibility of errors always exists. So definitely stay in the driver's seat of your own due diligence. Okay, so for those of you who are maybe new to the network, you might not be familiar with me and who I am. I am the director of RealWealth Realty, and I am also an investment counselor here at RealWealth. I'm also an investor. That's, I think, the best part of my job. I am sort of addicted to investing in real estate. My husband and I got into this together, and it was really through his military career that our eyes were kind of opened to this idea of owning rental property long distance. So my husband is an active duty Army officer. It's given us the great privilege of living all over the world in Asia, Europe, South America, East Coast, West Coast. We're currently now in San Antonio, Texas, and Texas is where we call home. We're both born and raised in the Dallas area. So we got our start investing in real estate by purchasing properties at duty stations where we were assigned. We were just smart enough to run some very basic math that told us, hey, it's cheaper to own this property than it is to rent it. Why don't we buy it and then we'll hang on to it when we get assigned to the next place and we'll turn it into a rental. Fast forward a couple years and we were looking at our 401ks and IRAs and our TSP and going, oh, wow, we're doing everything right for retirement. But then it dawned on us, we can't touch that money until we're 59 and a half. Meanwhile, there's these rental properties over here that are appreciating, that are cash flowing, that are being paid off. And suddenly we started to see this opportunity to really shift our focus from traditional retirement planning to purchasing buy and hold rentals. So we actually became members of RealWealth back in, I think it was 2016 or 2017. And we had a lot of cash that we wanted to get reinvested. We had done a live and flip, and right before we moved to Europe, and we were looking for teams and people that could help us acquire rental properties from abroad. And so we became members of RealWealth and very quickly scaled our portfolio. And then, ironically, a couple of years later, I came to work for RealWealth. But that's a little bit about my story. I continue to invest today. I invest through a lot of RealWealth teams still, and on my own. But I'm really passionate about teaching other people the fundamentals and helping people kind of experience that paradigm shift that I experienced that has totally changed my financial future. So that's a little bit about my background. Here's why I love real estate. It's not just about cash flow and appreciation. I think that's the mistake a lot of people make. They're not looking at all of the different ways that real estate pays you. I've taught an extended class on this topic. I'm so passionate about it. I have an hour-long class on realwealth.com called The 5 Ways That Real Estate Pays You. I'll make sure that we include a link to the replay of that class. I know that Celia and Jill are monitoring the live message board while this replay is being played for you. So I'll have them throw that hyperlink into the chat. But this class, I kind of go over each of the 5 ways that real estate pays you. Real estate gives us cash flow, of course. That's the amount of money that we have left over every month after we pay all of our holding costs. We have principal pay down. The tenant is paying down that loan for us, and principal is accumulating for us in that property. Of course, there's tax benefits. There's great write-offs and deductions. There's even more write-offs and deductions if you become a real estate professional. But this is probably one of the most common ways that real estate pays you that gets overlooked. It's kind of the hardest to understand, so it's no surprise why, but it's another great benefit to owning real estate. It's a hedge against inflation. And I like to point out this hedge against inflation in 2 ways. One, in the appreciation of the property, right? The home values will inflate as the strength of the dollar weakens, as it requires more of those same dollars to purchase or acquire the same asset. That's great for people who have real estate assets that inflate. But another way that this hedge helps us is when we are levered investors, when we have come in and we own that asset, but we've only put 20% down to acquire the asset. We're leveraging the power of the bank's money to really increase the benefit of inflation in our favor. And then, of course, the cherry on top or the roof on top of the house is that appreciation. That home value is going up, up, up over time. So again, I love this topic. Check out that extended full hour-long class to really dive deep into these 5 different revenue streams. But we're here today to talk about proformas and projections. For those of you who are brand new to real estate investing, I feel like when people start throwing around terminology, this can get kind of overwhelming about what numbers are most important, what is a pro forma. So we're going to break it down kind of simply here today, but a pro forma is just a fancy way to say it's a financial analysis of an investment property. It demonstrates the breakdown of all of your fixed monthly expenses relative to the income that a property generates. So proformas, and I'll show you on the next slide a sample proforma, so you can see the breakdown of all the monthly expenses that you want to be accounting for when you're generating a proforma. And then, of course, you're taking the rental income of that property, subtracting all of those fixed costs, and your cash flow. That's really what a proforma is telling you. What is the cash flow yield on that property? The thing that I think is really important to remember when analyzing proformas is that, one, they're just projections, right? These aren't guarantees. So when you, as an investor, are considering a property, you need to do your best to firm up a proforma. This can be difficult because everybody tends to use a different standard or a different format of a proforma. What is most important is that you understand how to read one. And more importantly, I think you need to know how to make your own so that you can control the variables. Of course, you're going to go and firm up things like an interest rate from the lender that you're speaking with about the property. So you're going to put that interest rate that you can qualify for at that time into a pro forma to generate more accurate projections. Of course, the same is true with your rental projections. You want to go and verify those rent prices on your own. But understanding how to build your own pro forma, I think, is key to your success as a real estate investor. So we at RealWealth, we've tried to create a standard pro forma on our platform to try to make it as easy as possible for our members to look at, properties from 15 different turnkey providers, but understand what they're looking at, have some continuity there in analyzing the deal. It's very difficult to do, but this was our standard old RealWealth pro forma, very basic. This is a cash flow analysis, right? So we had our first column there that was if you were putting 25% down on the property, and then we had an all cash column, and it would show you the line items for your fixed monthly costs, giving you your total expenses for that month, You take your rental income, and the difference there is your cash flow. So this works. This did the job. But again, as interest rates got higher and higher, your principal and interest payment is obviously really impacted, particularly by deals at these higher price points. Once you're analyzing deals above 250,000, a point or two of interest makes a pretty big difference to the bottom line. So what we were noticing is that deals that we knew were in high growth areas where rent was going up every year, where home values were going up every year, we knew these were great investments. We were having new investors, pass them by because they're not interested for $128 a month. So we knew that it was time for us to kind of broaden the aperture a little bit. We want a standard pro forma that shows us the monthly expense, but we needed to find a tool that would allow us to consider all the other ways that real estate pays us. And then of course to extrapolate them over time as well. Something I want to point out on our standard pro forma, Performas generally should include maintenance and vacancy overages. The reason we didn't include them as a fixed line item on our performas is because we didn't want to inflate or deflate every performa based on our measure. So we always encourage you need to write in a line item for maintenance and vacancy that reflects the risk you feel comfortable taking, right? How old is the home? If this home is brand new, you probably don't need a very big maintenance overage, or it would be super conservative to do so. So we always included that in our fine print there, that you needed to include that maintenance and vacancy overage. So this was our pro forma for so long. It served us well, but we have said goodbye to it for this main reason. It didn't illustrate returns over time. We are still in the cash flow is king camp, but we recognize that it doesn't paint the whole picture. And these three bullets are why. I mean, we know rents generally, especially in the markets where we're looking at, the markets go up year over year. We also know expenses go up too, right? But generally not as fast as the rent increases. A higher percentage of our holding costs each month are fixed expenses, our mortgage payment being one of the largest line items in our monthly expenses. And then, of course, over time, property values go up. They always have. Kathy Fecky always brings up that great table from Fred that shows property values over time. And yes, real estate is subject to market cycles like every other investment. So that's why we don't recommend a short-term, buy low, sell high kind of strategy with real estate. Over time, they've always gone up. So we want to be sure that we're bringing that in to our analysis of property. We shouldn't be making long-term decisions by looking only at short-term metrics, that year one metric. So introducing our new RealWealth Pro Forma. So I want to take you guys on a quick tour on the Realty portal so that you can see exactly what these pro formas look like. And then I'll show you this great software company that we are leveraging to help us build this new pro forma. Okay, so here we are. I am on the Realty portal. Go to realty.realwealth.com. You can select any market from the gray drop-down bar there. I've selected our Tampa market from the single family rental tab there. And I am clicked on the sample properties tab. If this is brand new to you on this webinar, I totally encourage you to spend some time looking on our portal. We have so much information here for all of the property teams that we work with, including a great hour-long webinar with every team that we work with. So you can, as I like to say, speed date all of the teams that we work with here at RealWealth. But this is just a quick look of what you will now see on the sample property page of every market page. So this is a deal that was sent to us by the Tampa property team, and it was an actual deal. Now, we don't update these every day as inventory changes every day, but we try to maintain, a current, recent example of inventory from this team. Of course, to get access to their actual inventory list, you want to click on that Connect with a Team tab next to you right there to find out how to access their real-time inventory. But this sample deal allows you to analyze exactly what we've been describing today. So this first section here, the purchase analysis, this should look really familiar. This is a cash flow statement, essentially. This is showing you year one, what are all of my fixed costs, right? We've added these great tool tips here that make it very easy for you to understand the definition of this field. So, some of these are pretty self-explanatory, purchase price, but some of these other terms for new investors, they can get a little bit complicated, of what exactly that means. So be sure that you hover over this question mark to pull up a tooltip there. Okay, so this looks very familiar to our previous pro forma. And so it's not where I want to spend the majority of our time today. What I really want to show you is this buy and hold projections section. So as I mentioned, we know properties are appreciating. We know the income is increasing on those properties, the rent. We also know that our expenses are going up. So we have made some assumptions so that we can extrapolate these increases over time on our investment. Now, just so that you know, these are guesses. These are estimates based on past performance. But again, past performance doesn't guarantee future results. So we have kind of a standard, what we believe to be conservative estimate for appreciation for what we consider to be growth markets and markets that we consider to be more linear. So a linear market, we generally expect to see appreciation of, 2 to 3% a year. Appreciation, we expect more than that. So these are conservative estimates, but this tells you exactly what our assumptions were as we try to gauge what the cash flow or predict what the cash flow might be in year 5, 10, and 30. So you can see here, this lets you look at year one, $1,500, not life-changing, right? But just by year 5, we're already up to $6,000 a year. So we're definitely getting somewhere with that kind of return. And then certainly by year 10, $13,000 a year, that's not chump change, especially if you have a couple of these. That's retirement. That's what that is. This total equity, this is a figure that I love. I was chatting with Celia about this metric right before we hopped on to record this, but this metric is showing you the actual portion of a property's market value that you own. So this is looking at the market value of the property. So it's considering that appreciation minus your loan balance. So it's taking into account that principal pay down that we talked about. And look at this, in just year 5, you have almost $250,000 of equity in this property. Now, some of that equity you put in yourself, right? Our down payment up here, our cash invested was 105. But look, you've more than doubled your money in 5 years. So this is where you're starting to see the power of holding real estate over time. This is why we buy this. Well, this is really why we buy real estate, not this. It's not year one that does it for us. Then we have cherry-picked some specific metrics that are, I think, the most common for investors to look at when looking at a property. The first one is the cap rate. This one is used a lot to analyze commercial property. I honestly don't love looking at cap rates to look at residential property because it doesn't factor in your debt service. So a cap rate is just looking truly at the net operating income relative to the purchase price, the full purchase price of the property. So it's an important metric, but I definitely think if you're a leveraged investor, I like to look at cash on cash return, at least for the first couple of years, because that is truly factoring your return based on how much money you put in the deal. Return on equity, I included here because I think this is another important metric for investors to monitor. Return on equity is looking at, how much of this property you own, right? The appreciation and the principal pay down relative to the amount of cash flow that it gives you. The reason why you want to monitor this is because your property is appreciating greater than how the expenses are increasing. So you're definitely going to start seeing a diminishing return on equity. You have more money in this home and your income is not increasing at that same rate. So this is the metric I think a lot of Californians should be looking at when they're considering whether they should sell that rental property that they have in the Bay Area. Your cash on cash return might be great because you didn't put a whole lot of money into the deal to begin with, but what's your return on equity? You might have a lot of really lazy capital sitting in that deal. And then your total return on investment. This metric is showing you if you were to sell this property in this year, what would be your total return on investment? So this is always going to be negative in year one because we have transaction costs. When we sell a property, we've estimated at least 6% is going to go to agent commissions and closing fees, right? So it never, well, it rarely makes sense to sell a property in year one. But you can see over time, total return on investment just gets ridiculous. So this is it. I think this is such a great improvement. I'm so thrilled. This has been a long time in the making at RealWealth, but we've really wanted to bring you guys better analysis like this. How are we generating these fields? Well, good news. We're using a great software company called DealCheck. And if you click here at the bottom of each of our performas, it will link you to a DealCheck report. So this is powered by that software company. And this is a full, I think, 10-page report that shows you way more analysis than we have condensed onto our standard performas. So we at RealWealth has started a practice of every time we're analyzing a deal, every time we are promoting or recommending a deal to any members of our network, we're putting them in DealCheck first so that we can look at the analysis and how this property performs over time. And so what we are suggesting and what we want you guys to do is do the same. You can create your own DealCheck account and you can analyze deals for yourself and dig way more into the data than we've condensed on our version. I know you data nerds are out there. I talk to you a lot on strategy sessions and you want to look at all these numbers so you can, to your heart's delight, get really in depth to the analysis there. So if I go back up to the very top of the report, there's so much information here you'll enjoy geeking out over. You'll see that you can find the contact information for the team that featured this particular property. Again, remember, this is a sample property. So this is an example of inventory that they recently had available. Of course, to get access to their current inventory, you've got to reach out to them. So you can get their contact information there. And then you can click right here to connect with your investment counselor. So if you have a question about this report or about this team, this is an easy way to get linked back to your investment counselor. So DealCheck is awesome. It's our preferred method for analyzing deals. If you're interested in checking out the DealCheck tool, you can click the dealcheck.io hyperlink right here at the bottom of each report, and that will take you directly to DealCheck. All right, now I want to take you back to our presentation so that I can introduce you officially to DealCheck. All right, so now I am joined by the founder and CEO of DealCheck, Anton Ivanov. Hey, Anton, thanks so much for joining us.
Hi, Leah. Thanks for having me. It's great to be here.
Anton, we reached out to you months and months ago, kind of explaining our intent to leverage this great software that you've put together. It served the exact purpose that we were looking for, to be able to easily throw in deals from lots of different sources and analyze them with a standard. So we've enjoyed getting to learn about this platform, but for the benefit of everybody here, I invited Anton to come on today to give us a little bit of insight to DealCheck. How this platform works, why you created it, and then give us a little tour of the platform itself. So Anton, tell me a little bit about the genesis or the creation of DealCheck.
Sure. So like you, I actually am a very active real estate investor myself. My wife and I started about 5 or 6 years ago. And actually some of the first properties we bought were turnkeys. Because we lived in San Diego at the time, which is a very expensive market where it's hard to find rental properties. And that was kind of our way to start investing out of state, where we really had no connections or no knowledge of the market. And like you mentioned previously, deal analysis is a crucial step in the real estate investing cycle. They say you buy money in real estate, you make money in real estate when you buy. And what that really means is, there's millions of houses out there. There's thousands of turnkey properties for sale. So how do you find the ones that you should be investing in, the ones that will actually make you money, passive income and wealth long term? And you do that by crunching the numbers, by running the financial projections, analyzing pro formas up front before you buy the property. So when I was first starting out a number of years ago, it was pretty common to use Excel, as I think most investors know, to run the numbers for potential rental properties, which, it can work, but it's slow, it's hard to customize. So I really thought that there should be something, a cloud-based tool that you can use online, that you can use on your mobile phone, to quickly analyze rental properties, run financial projections, look at your returns, and make quick decisions, whether you're driving around, traveling, looking at open houses. So I didn't find anything quite like that back then, or at least that fit my criteria for what I was looking for. So I actually built the first version of DealCheck myself, kind of in my spare time. It was a hobby project, if you would. Shared it with a few investors, just my friends that I knew, colleagues, and they loved it. And I was like, hey, I think I'm onto something here. So since then, we've grown our team, we've expanded, we've really listened to user feedback. And over the last few years, we've built a pretty comprehensive platform, I think, that's specifically geared to help you very efficiently, quickly, but also thoroughly analyze and compare rental properties, whether it's online, on your phone. Basically, give you all the tools, a full toolkit that you need to help you put together reports, to help you understand how much money you need to close on the property, how much money the property will make you, how the projections will change over time, help you generate reports, and a host of other features kind of built around deal analysis. So yeah, a little long-winded, but here we are.
Oh no, I love it. My head would kind of explode. I sat down one day and tried to build my own like more in-depth Excel spreadsheet to analyze deals, and I very quickly found myself like just too deep into formulas deeper than I ever should be.
Right.
So I'm thrilled to hear that there's people like you out there who know how to bring order to that chaos and make a really clean dashboard where I can just put in the information and it does all the work for me. And that's why it's kind of been our chosen tool here at Real Wealth, and why we are starting to recommend it to all of our investors, because it's just so important to, I think, control your own deal analysis process and don't just rely on the pro formas that other turnkey providers or sellers might generate for you. So I'd love it if you would take us on a tour and show us how DealCheck works and how we can create an account.
Absolutely. And I'll kind of piggyback on what you said. And we've spent a lot of effort making our tool both fast, but at the same time flexible. If you're looking to analyze a rental property with DealCheck, once you create an account, it can literally take you 30 seconds or less, or just a few minutes. But at the same time, we offer a lot of ways to customize your parameters, your projections. For example, like what you were showing earlier, for appreciation, for income growth, for expense growth. So if you do want to fine tune the projections to fit a specific market, a specific asset type, we make it very easy to do so, and help you learn in the process, what the different formulas mean, how they're actually calculated. So you're not just, looking at cash on cash return, for example, and saying, oh, okay, it's 12%. Without really understanding what that number means, what it's telling you, because I think it's important for every investor to actually understand the formulas and the math behind the numbers, and when to look at the cap rate, when to look at the cash on cash return, when to look at the ROI. So we build a lot of help tools and glossaries and that sort of thing to inside our software to help with that. So just a quick intro here. You can create an account. Anybody can create an account at dealcheck.io. And like I mentioned before, our platform is cloud-based, so it's available online on any computer through the browser on our website. You can also download our iOS or Android app by just searching for DealCheck on the App Store, and all of your data will sync automatically. You don't have to kind of copy paste stuff like you would with Excel. So you can start analyzing a property on your phone, maybe when you saw it in person, or just driving around or traveling, then come back, open it up on your laptop or desktop computer, and kind of dive deeper into the numbers. So that was one of the main things that we focused on when first developing the platform. Again, just a few features that we offer. We try to make property analysis as quickly as possible. So we actually provide a way for you to import property data from a number of sources. These are public records, tax assessor's office, various listing websites. You don't have to type in manually all the information. You can just type in the address, which I'll demo in a bit here, and Deal Check will pull pretty much all of the info photos for you. So you can actually get into analyzing the property instead of copy pasting basic home facts as you potentially would with Excel or other platforms. Again, there's many ways to customize all of your deal parameters, from expert, I would say, to kind of just beginner. We offer support. There's a lot of default assumptions built in. So if you are just new to real estate, you don't really know what to put for certain numbers or for estimates. There's a pretty good set of basic defaults and assumptions that will be there for you when you first create your account. So you can start with those and definitely also customize them as you get more experienced, as you understand the market. So many different financial analysis projections tools, again, some of which Leah mentioned earlier. We have a feature that allows you to look up recent sales and rental comps. Again, sales comps are important when you're trying to understand the value of the property, help you understand the after repair value. And rental comps are extremely important to help you understand what the potential market rent of your property will be, because that is a very important kind of assumption or a number that sits at the top of your cash flow projections. So if you kind of underestimate or overestimate your rent, the rest of your assumptions could potentially be in jeopardy.
Yeah. Anton, I'm curious, where do you pull the data for the rent projections? I know a lot of our, investors go to rentometer.com, or some are using Zillow. What is the source that pulls the rent estimates or the rent comps?
So we actually have our own platform that's called Rentcast, and that may be a conversation for a different webinar. But it's kind of similar to Rentometer, but we think it's a lot better. And it's our own engine. We collect our own data, and we come up with our own estimates that are based on the similarly listed properties for rent, nearby, that match the property type, bedrooms, bathrooms. So we put a lot of work on it. We stand behind our rent estimates. We believe they're very accurate. But yeah, it's all sourced ourselves through our own platform, and it's kind of a sister app that we have called Rentcast.io. That is also available as a standalone product, but Deal Check pulls in all of that data automatically for your rental properties as well. Again, there's a max offer calculator to help you calculate offers, and a great reporting feature that actually creates the reports that Leah just showed not too long ago, where you can generate a complete PDF or online report that has all of your projections, kind of maps and photos and property description and analysis in one complete PDF. A lot of folks use this tool when they're working with lenders to help them get financing for their properties. Lenders love these reports because they're so in depth and have all the metrics that a lender would want to see. Or if you're investing with partners, perhaps, or just your spouse, and you'd like to share a property with them, this is a great way to do so.
Yeah, so, I used this personally just recently with a property that I was selling. The property was just generally going to appeal to another investor, not an owner occupant. So I threw the deal with our nice agent photos and everything into
Absolutely.
Deal Check, and put in what I knew to be the rents, because I was working with the local property manager, and I really just fine-tuned this nice report. And I printed that PDF and sent it to my agent and had her share that with prospective buyers. And I just think it makes it makes it so easy.
Right, both on the buying and selling side. So yes, if you're selling a property that you own, or if you're buying, I think it's a great tool to just concisely share the information between people, and you don't need a Deal Check account to view this. You can send this to anybody that you know. So many other great features with support, a lot of different property types that you can analyze. Obviously rental properties, but there's other ones too if you're kind of branching off and want to get a little bit into BRRRRs or flips, multifamily properties, wholesaling, that's all supported. So Again, obviously it's our platform, but I think it's a great tool. I've used it myself for every property that I've actually purchased since DealCheck was available. I threw away my old Excel spreadsheet, so we definitely stand behind it. It's not just something we publish. It's something we all use. Our entire team uses who invest. And I'll just touch on the pricing just a little bit. This always comes up. So DealCheck, you can start using it for free. We have a free forever plan. It's not a free trial. It's not like a demo plan. It's fully functional. Obviously, some features are kind of locked and there's a few limits, but if you're a new investor, you're just getting started, it will work perfectly for you. All of the core analysis tools are available. You can see your projections and reports, and all of that will be there for you. And then we offer a few upgrade options depending, again, your volume of properties you're looking at, what specific features you are interested in. But again, we try to keep these very reasonably priced. There's some other software platforms that charge hundreds of dollars a month or thousands a year. And we've always made sure DealCheck is affordable for especially new investors who are starting out, or maybe they don't have a lot of capital. They're trying to save their expenses. We don't want to overcharge. So our plans are, I feel, are very reasonably priced. And specifically for, RealWealth members, if you use the RealWealth promo code, you will get 20% off on any of our premium pricing plans for as long as you're subscribed. So it will take 20% off every single of your payment if you use the RealWealth promo code. That's something we've made available exclusively for the members of the RealWealth network. So enough of that. I'll kind of jump into a quick demo of our software. So again, this is the online version of DealCheck. At dealcheck.io, you can create a free account or try our mobile app if you prefer to do stuff on your phone. So when you first sign in to DealCheck, and again, you can create a free account at dealcheck.io or download our free DealCheck mobile app. You will see basically your deal dashboard or your property dashboard. This is one of the features that I think beats Excel in every way. It's a single place where you can see all of the properties you've analyzed. We have ways to quickly tag them, to select them, to compare them. Basically put them in folders if you want. And this is to help you kind of manage your deal flow. Maybe you looked at a few properties, this month, and then you kind of put them on hold. You can still leave them in your account, come back to them next year or next month. Use them as a comparison. Keep your old properties or old performance that you ran, just if you want to reference them, or maybe you learned some things when analyzing your first rental property that you purchased that you want to do differently on your next one. So you can keep that analysis, come back to it later, and refresh your memory to see, oh yeah, maybe I should bump up my maintenance or vacancy allowances or something like that. So many different ways to search and filter your properties. You can quickly add a new property, and this is what I was talking about earlier. We offer this importing data option. Obviously, you can type in the data manually, but I think it is much easier to just throw in an address here. Click the search button, and our software will pull up a lot of information about this property from public records, from what type it is, and bedrooms, bathrooms, square footage. It will give you several, valuation estimates like the Zillow Redfin realtor estimate, rent estimates, property tax estimates, insurance estimates, almost all of the assumptions, that you kind of would need to start working on your analysis will be pre-filled for you. Obviously, you can override all of these if you have your own, metrics or assumptions that you want to use, but it is there if you're just looking for a quick way to analyze the property. And then once you add it, you have full control over, all of the parameters in your deal, from the price you're purchasing it to the exact financing that you're going to use to purchase this property, or buying it just with cash. You can dive in and customize every cost, like a purchase cost you're going to have, every expense, rent, vacancy. Basically there's a lot of controls here, and it can be a bit overwhelming, especially for new investors. But as I mentioned earlier, a lot of the stuff will be pre-filled for you, so you can start with that, and then as you get more experienced and confident, then what you're selecting will kind of match the real world scenario. You can customize the options for you.
Yeah, this is where, I think I really want to encourage real wealth investors to lean into your investment counselors. I mean, we can help with some of that, decision making too. When you're building your own performas, we're certainly happy to talk you through, what would be a conservative, maintenance overage or vacancy overage, or, even with the property team that you're considering purchasing the property for. I mean, you definitely want to go in and override some of these operating expenses with the information that they're giving you. Of course, this creates an opportunity for you to verify independently the fields that the team is giving you. So again, you get the control here, to do your own and run your own analysis on a property. So yeah, I love this, and I love that you can even set up. We've done a lot of this at Real Wealth, setting up templates. So we've set up some
That's
templates
right.
for growth markets, that have obviously different appreciation estimates and rent growth estimates. And then we've set up different templates for our linear markets. So it's really easy for us to select a template, throw the deal in there. It's pre-populated with the assumptions that we've set to that template, and we can, get to the big long-term analysis really easily.
Yeah, and what Leah was talking about, every property that we have, you can set as a template. And what that does is, if you're happy with the assumptions and with the numbers and expenses that you've entered for that property, you can quickly save it for later. And you can have different templates for different property types. Maybe one for single family, one for small multifamily, or perhaps you're looking at different markets. Looking at the Atlanta market, or the Charlotte market. You can have different templates for that. So it gives you a lot of power to save your assumptions, so you don't have to guess every time or try to remember what you inputted last time. You can just quickly select a template when adding a new property, and we'll pre-fill all of that information for you, and then apply it to the new address that you're just analyzing. So again, a lot of kind of little tools. They seem small at the beginning that we've built in over the years, that just kind of speed up the workflow for you in terms of deal analysis, and also help you avoid mistakes.
Mm-hmm.
So if you know what a good vacancy, and you kind of nail down that number, it will save it for you, so you can come back to it in the future.
Yeah. So pull up a PDF report, a shareable report, so that we can take a look at it. And I'd be remiss if I didn't, while I have another investor who's into data, on the webinar with us, if I didn't ask you, like when you're analyzing a deal, and let's say it's a turnkey deal or a deal that's ready to go as a rental, what are you looking at most? Like what are the data points that speak to you the most?
So personally, in my rental investing, there's three metrics that I favor. The first one is the cash-on-cash return, that I think you also mentioned earlier. Why do I like this metric? Because I do think that cash flow is one of the primary return metrics of real estate. It's definitely not the only one. There's appreciation and loan pay down and tax benefits. But to me, the cash-on-cash return is a key metric. So together with cash flow, I like to see, a certain minimum cash flow usually from my properties in the first year, a certain minimum cash on cash return from my properties in the first year. And then I like to see that grow over time. And you can see that here. And it's a very good point that Leah mentioned earlier. A lot of times you look at these deals like this one, for example, and you see some red numbers in the first year. Our total profit, if we were to sell the property, is a bit negative, again, because of closing costs and loan pay down. Our initial ROI and internal rate of return are negative. I've also found that is very common in many markets, unless you're getting a very deep discount of the market value or purchase price of the property. Maybe you're buying off market deals or something like that, or unless there's kind of other very favorable conditions like super favorable financing. It's very common for returns on rental properties to grow over time and start even a little bit negative or small. And I think that's fine as long as the market that you're investing in has good fundamentals in terms of rent and price growth over time. It will push the home values up, which will build up your equity quicker. Again, Leah mentioned this number, as your property value increases and your loan balance decreases, which you can also see in our projections, your total equity will kind of spike and grow relatively quickly. And as at the same time, if the rental income is increasing, and your cash flow is increasing over time, that will also boost your returns and increase your ROI. So, but yeah, for me, it's cash flow, cash on cash return. And then I actually like the internal rate of return metric. I know you've highlighted the return on investment in your presentation, which is kind of a cumulative return, meaning, if I were to sell the property at that year, for example, year 5, and I've tallied up all of my cash flow and equity appreciation and loan pay down, this will be my cumulative return. I like the annualized version of that, which is the internal rate of return. So it's basically just taking this 129.1% of a total return and averaging out over 5 years and giving you kind of a annualized rate of return of 19.7% that you are receiving on your invested capital for the entire time you own the property.
Oh, I have never heard someone explain internal rate of return as an annualized return on investment. That that makes it so
That is
clear.
exactly what it is, and it's actually how we calculate it. So this rate of return, the cumulative rate of return is a good metric, but it gets pretty large pretty quickly. Again, for
Yeah.
example, this one we're looking at year 30, it's 2,713,
Yeah.
which is a large number. Is it good or bad? But if I tell you, hey, over 30 years you receive 16.7%
Right.
return per
Right.
year on your invested capital, now that starts to click because, hey, I can go compare that to the savings rate in my bank account,
Right.
which, I know I get, I don't know, maybe 1% now or something like that. Or I can compare that to my stock portfolio,
Right.
which frequently report their returns on an annual basis as well. Maybe it's 6 or 8%
Hmm.
per year. So this is how you can compare real estate as an asset class against other investments on kind of a similar metric of an annualized return. So
I love that.
this is one of the big ones I look at. And again, it's a cumulative rate. So it includes all of those 5, maybe 4 of the different returns of real estate that you mentioned, because we don't necessarily factor in the tax benefits in here, but it includes
Hmm.
your appreciation and cash flow and
Hmm.
loan pay down and all of that into kind of one figure. So
Yeah. I love
that's one
it.
of the metrics I like.
Well, you touched on one more thing that I want to get to because, we're passionate about informed investors. We want to increase everyone's financial literacy so they understand this stuff. And I think that's a shared goal of both of our companies. You've put a lot of time into your glossary and
We did.
explaining both in word form, but also in equation of how each of these metrics are calculated. And it was so good, we had to borrow it, So we're our those tool tips that you saw on RealWealth Standard Pro Forma, they align here with the same, verbal definition. But talk to us a little bit about kind of the importance of this, or anything you want to elaborate on this feature.
Yeah, so as Leah was saying, and I mentioned earlier, we're big believers in educating investors, not just throwing numbers at you, because it is a lot of numbers. For example, we're
Mhm.
looking at projections. There's, almost 10 plus rates of return. So which one should you focus on? We've put a little help question mark icon similar to the Real Wealth website next to pretty much every return, every calculated metric, where you can read a short definition of it, but also see the exact formula.
Mhm.
And then if you click on one of these icons, it kind of takes you to our more in-depth glossary that has a little bit more information, links to related terms, and we've pretty much try to include each metric, each return, each rule, kind of each important concept in real estate investing here. So you can actually learn as you go. And one thing that I always recommend to investors is not try to get overwhelmed with all the numbers or try to use them at once. I would read over the definitions, understand, for example, what is a cap rate, what is a capitalization rate, how it's calculated, and then decide, is this a metric that you would like to focus on? Because different investors and different markets and different asset classes, property types will focus on different ones. So again, for me, for example, cash on cash is a big one. Internal rate of return is a big one. Other investors like multifamily, as Leah mentioned, or commercial investors really use the cap rate a lot. I personally think it's not as important or useful in residential real estate investing, and I seldom rely on it personally. but maybe, maybe you like it and you can use it. So I would encourage everybody to read the glossary. We actually have a downloadable version of it. I believe we have yep, there's a link right here where you can download a PDF that basically has all of these terms that you can, save offline or take it with you or even print it out with all of the formulas. And all of this is always available to you online or through the mobile app. So we're big believers in education. And another thing I mentioned is, I know a lot of people use Deal Check to just do practice analysis. And if not, it's not maybe something that I've thought of myself at the time, although I have done it. Basically, even if you're just starting out and maybe you're saving up the capital for your first down payment on your first property, or you're just kind of waiting for, maybe a few months to get started until next year or something like that, I would start practicing deal analysis early in your journey. Actually understand the numbers, understand how the numbers are calculated, go through the process of filling in, the worksheet with the various assumptions and expenses, play around with them. It doesn't have to be even a real property, or maybe a property you find on the RealWealth website that kind of piqued your interest. Maybe you're not going to buy it immediately, but play around with the assumptions, look at how long-term projections affect your cash flow and profit and equity over time, and just kind of get familiar with this process and get comfortable with it, because when you have the capital, when you're ready to invest, properties may go quickly, even turnkey properties. I think it's a good way to kind of get ahead of other investors or competition by learning deal analysis early, getting comfortable with the process. So then when you do come across a deal that's a good one and that you want to buy, you run the numbers, it looks good, you're confident that the numbers are solid because you know what assumptions you've entered, then you're in a much better place to actually put an offer, put this property under contract, and get your first rental property.
I could not have said that better. That is amazing. There's another utility of this that I could see beneficial. I'm pretty regimented about doing an end of year kind of wrap up on my full portfolio too, just to kind of gauge how things went. And I really love the idea of saving a projection here, saving a pro forma for the property in the year that I acquire it based on what I knew at the time of that deal. And just save it. I have a nice little, filing system on my computer of all the details of every property, but save that pro forma in there with it, and then kind of compare how is it actually performing relative to how did I think it was going to perform. And this is where, for me, real estate is incredible, because almost every deal I've bought, with the exception of a few lemons, but almost all of them have
outperformed. Always happen.
Yeah, the lemons happen, but almost all of them have outperformed what I thought would happen. Now we had the last 2 years have been really, really good years for every real estate investor. But I think it's just great to kind of have that, mark in time of what you kind of projected this investment to do for you, and then gauge how it does every year and if it's on track.
Absolutely.
All right, Anton, let's pop back over to our presentation. Okay, so again, we've made it really easy for you guys to get connected with Deal Check. Again, we're recommending everybody create your own account and start analyzing your deals, leveraging this great tool. They have been so kind to offer us a coupon code for all RealWealth investors. So be sure you throw in that code RealWealth to get 20% off your subscriptions. I think it's well worth it. We do a pro account for sure. The features are awesome. So what's next? Definitely spend some time getting familiar with RealWealth's new pro formas on our Realty portal. You're going to start seeing them more on our webinar presentations, and we're definitely more than happy, any of the investment counselors, to kind of walk you through some of those fields and help you really understand what it is they're telling you, so you can be a more informed investor. And then, of course, we recommend you create an account on Deal Check using that coupon code. All right, Anton, I am so grateful for your time today. Thanks so much for joining us, and thanks for knowing how to develop such an awesome tool for all of us.
Thank you, Leigh. It was good to be here. I'll just mention one thing before I leave. We have a great support team as well. I know you guys have the investment counselors, and they're great folks to help you narrow down the projections, in the specific turnkey markets that you're looking at to buy. If you have any questions on Deal Check, if you're stuck, if if something is not working, if you don't understand, some of the formulas or how the math is calculated, click the little blue chat icon in the bottom right of our website, and that will connect you to our support staff. In real time, they're available during, Monday through Sunday, 7 days a week during business hours. So they're happy to help you answer any questions. We have tons of folks just message us. We'll even walk you through a deal analysis, help you input the numbers, and hopefully get you on the right track. So please feel free to utilize that if you get stuck specifically using deal check.
Excellent. All right. And Anton, thanks again for coming. And for those of you who are watching this live, of course, we're going to get this replay posted on the Realty portal so you can rewatch it or share it with your friends. But we are so appreciative of you joining us today. Thanks again. See you later.
Thank you. Bye-bye.